Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined today by Ed Carson. And on today's show, we're going to take a look at another day of selling in the major stock indexes. There was hope that the final trading week of 2022 would bring about some sort of rally, but the week is winding down quickly, and we are just mired in selling. But before we talk about today's market action, Ed, as usual, has found three stocks to watch. Ed?
Yeah, three stocks to watch, not to buy right now. Energy stocks had a rough day, but I still think people should be looking at ExxonMobil, Valaris, and First Solar.
Okay, very good. XOM is the symbol, VAL, and also First Solar, FSLR. All right, well, we're going to start by taking a look at the NASDAQ composite, which suffered a distribution day yesterday, a higher volume decline. It looks like it's going to get another higher volume decline today, down nearly 1.4%. And, well, Ed, we were hoping the NASDAQ might be able to hold Thursday's low, but now it looks like we could test the 10,000 level here.
Yeah, and if we test the 10,000 level, that means we've undercut the bear market low of 10,088. So this is the bear market closing low that we have not closed this low since July 2020. Getting through all this area in here, nothing is really working well. A couple intraday rallies off lows, they petered out, basically closed the lows of the day. Growth is terrible, and the rest of the market didn't have a good day either.
Yeah, well, why don't we move on to the S&P 500, which at last check was still holding above Thursday's low, but not a good close at all for the index. And like I said, volume was pretty light yesterday, and it is going to be higher today, so it will be another distribution day. That makes 6 higher volume declines for the S&P 500 in the month of December alone. So not much good to find in the S&P 500 either here, Ed.
Yeah, only other things I'll add is that it's losing sight of the 50-day line. It's going to take some real effort just to get up there, and that's assuming it could start moving higher. It was the worst close since November 9. Just so definitely fading.
Yeah, looking in the S&P 500, I mean, there was just broad-based strength. It wasn't one sector or one industry group that was lower. You had Chinese stocks selling off. You had solar stocks. You had oil and gas stocks. You had semiconductor stocks. Just broad-based selling in all these areas of the market. And even the Dow Jones Industrial Average, we can pull that up and see that it got hit by some selling today and also lost support, not by much, but did lose support at the 50-day moving average here.
Yeah, this is the best part of the market, and it's starting to struggle too. Yeah, it's above its December lows, which is fine, which is good. But after hitting resistance at its 21-day line several times in the past week or so, closing below the 50-day line for the first time since October 21st, which was the follow-through day for the market. So really, again, just a lot of key levels being broken today. Really not a whole lot you can hang your hat on.
And the worst performing index, actually, small caps, the Russell 2000. So we take a look at IWM, which at last check was down about 1.5%, and it's just mired in selling along with the other major stock indexes here. The 10-year Treasury yield really has not been had a big move yesterday in the 10-year yield, and it extended gains by just a little bit, but not surprising, Ed, to see that sharp move off lows for the 10-year yield. The yield's been going up and the market's been going down.
Yeah, for a while there wasn't that divergent, that there was that link between higher yields, weaker markets, and that wasn't happening. Definitely picking up steam the last several days. So yeah, it's still a lot of concerns about the Fed, about the economy, China's COVID. There's just a lot of uncertainties and a lot of headwinds.
All right, let's also take a look at XLE, which is a popular ETF that tracks the oil and gas space, and you can see this ETF came up close to its 50-day moving average Tuesday, but got turned away today, and yeah, just a weak day overall for oil and gas stocks.
Yeah, natural gas was worse than oil, and there's definitely some issues. This is not broken; it could rebound, but obviously you need higher prices on energy on oil and gas to get this to really work.
Okay. And we mentioned just the continued relentless selling in semiconductor stocks. It looked like the chip equipment stocks were going to be, ready to lead the market, but then you had a warning from Micron. I believe it was last week that has just spurred another round of selling in the chip sector. And this is the Van Eck Semiconductor ETF SMH, which got hit by more selling today. And just this is just technicals look pretty bad here as well.
Yeah, and this was a really bad sign for the rally, just the weight of chips and how much chips play a role in so many other, just so many goods. This has lost about 15% or so since this peak here. I mean, things were looking pretty good, but in just over 2 weeks, things have really deteriorated here and elsewhere in the market.
Okay. Well, let's take a look at some stocks to watch. We mentioned the selling in the energy sector, but there are still some names holding up there, including Exxon Mobil, ticker XOM, waging a battle at the 50-day moving average. Had a little breakout over the 105 level, nice run up to 114. It's just been consolidating near its 50-day moving average. Stock doesn't look ready yet, stock doesn't look ready yet, Ed, but the technical structure looks pretty good. Relative strength line still holding near highs here.
Yeah, it's something to watch. I mean, just again, and obviously, if crude oil and natural gas prices and gasoline prices tumble, this is not going to work. It's not. A lot of things may not work, especially if the general market is. If this could rebound above the 50-day line, maybe get above Thursday's high and Tuesday's high, maybe you could argue that there's an early entry here. The official buy point isn't that far away, only $6. So even that wouldn't be that far away from the 50-day line. So it's worth watching. Clearly, with Exxon and with energy stocks and stocks in general, looking for early entries is often the way to go, because once you get near the highs, that seems to be when the market runs out of steam. So you want to try to take advantage of that. Again, that's if you want to take anything. I think you have to be cautious about making any moves in this kind of market in terms of new positions or even just holding stocks.
Well, there's no doubt about that. Especially, you get stocks that are in reasonably good technical setups, and sometimes good technical patterns, good technical setups don't mean much when the market is under distribution, which it is now. But at least with ExxonMobil, I know you get a dividend yield north of 3% here, and also pretty good price performance to boot. So, weekly chart shows a nice little consolidation here. Not ready yet, but good one for the watch list. We'll stick in the oil and gas sector and turn to the drilling group and take a look at Valaris. VAL is the symbol here, and boy, I see a nice big estimate, annual earnings estimate for 2023. That's a good sign. What else looks good here, Ed?
It did bounce today off the moving averages. Obviously, it did fall almost 3%, so it wasn't a great day. But basically, the 10, 21, and 50-day line bounced off of that. It has a base here, probably showing up, on a weekly chart, there. But it's or will at the end of the week. So there is that base coming up. Yeah, there we go, at a cut base. It'll probably show up on a daily soon. This could probably work as an early entry. In fact, at the end of the week, this might be a handle, at least on a weekly chart. So there's things there. There's some strong fundamentals. It's holding up reasonably well. This one's holding above the 50-day line. So definitely one to watch, if it rebounds and gets back above here.
Okay, very good. That's Valaris, ticker VAL. And then outside of oil and gas, solar stocks got absolutely manhandled today, but at least with First Solar, there was a decisive break of the 50-day moving average in the 150 level, but at least buyers did come in and try to lift First Solar off lows, but still a tough percentage decline in higher volume.
Yeah, this one is definitely weaker than Exxon and especially Valaris. There's like no question. And as David Saito Chung mentioned today on IBD Live, is that it does sometimes go underneath here for a while. So maybe this has a few days and then comes back. This is clearly performing better than other solar stocks, which already melted down, yesterday. So if the sector bounces back, if the market shows a little strength, this one could come back. And so it's one you probably want to watch in case it breaks a trend line or gets above short-term highs. At the end of next week, it'll probably have a new base as well. So a lot of things to watch. But again, this one might break down entirely in the next few days.
Yeah, why don't we just also take a look at Enphase too, which was a stock on leaderboard, but we cut ties with it yesterday on that break of the 50-day moving average, and Enphase extended losses today. So lots of selling in the solar group. Well, Ed, I woke up to start the week. Monday was a holiday, thinking that hey, 4 trading days left in 2022. There's a chance we could get a little rally between now and the end of the year, but we only have 2 trading days left now, Thursday and Friday. How are you feeling about ending the year on a positive note here?
Well, if we ended on a positive note, it'll be maybe at the last note. I mean, it's not going to be, not even going to get a chorus. We have 2 days left, and let's face it, you're not going to end. 2022 has been a rough year. It's not going to become a good year by the end of the year. I think investors, for the most part, should be looking ahead, preparing for better times ahead, whether that's in January or several months down the road. Eventually, there will be, but you want to be looking for stocks that are holding up and maybe learning from mistakes or learning lessons from this year, but not trying to hope that things are really going to turn around in the last 2 days of the year.
All right. Well, we'll be back with more stocks on Thursday and more stocks on Friday to end the week, and that's the great benefit to the Stock Market Today video. We'll give you stocks to build your watch list. We've been adding watch list names to leaderboard, so we're prepared when conditions do turn. It's not happening yet. We're still in a tough market environment where buy prospects are very tough to find. So be patient out there, folks, and just continue to build those watch lists and favor a pretty good cash position. It's best when there's selling undercurrents of selling in the broad market. It's usually best just to watch from the sidelines and not try to make money in a downtrending market. So that'll do it for today. Thanks as always for watching. If you haven't checked out IBD Live yet, be sure to do that at investors.com/IBD Live. We'll be on the air tomorrow morning starting at 6:20 a.m. Pacific time, and we'll go for about an hour and a half or so. And again, if you want to check out a trial for IBD Live, investors.com/IBD Live, that'll get you signed up. So that'll do it for today. Thanks again, Ed, for your insight. And Ed and I will be back here tomorrow for another Stock Market Today video. Have a great rest of the day.